Well, we are only 2 days in to a holiday-shortened week, and there's already been a lot of action, particularly on Monday. Monday was a crazy day where just about everything rallied, even crypto-related stocks, and Bitcoin managed to rally on Monday, although the crypto-related stocks gave most, if not all of it, back today, with some of the biggest names in the industry hitting new lows on the year today. But the biggest winner on Monday were the gold mining stocks. Huge day. I think the GDX and GDXJ were each up about 5% on the day, a little bit more. A mixed bag today. Some stocks continued to rally, a little bit of a pullback. The price of gold now is back above 4,100. Let me give a quick check where it is here on Tuesday night. 41.40, up another $11 from today. And silver is back at 51.5. So both silver holding nicely above 50, gold solidly above 4,000. You know, the GDX and GDXJ are still 9% and 12% off their highs as far as how much they'd have to rally. But some of the stocks, including some of the ones that we own in our dividend payer and value strategy, we own a few mining stocks in those strategies. It's not my gold strategy or my gold fund, but we still have a few miners. And two of the ones that we own are Barrick Gold and IM Gold. And both of those stocks today hit new highs for the move. So some of the names have already started to hit new highs. And I think this is a leading indicator. And in fact, I think that the gold and silver stocks are going to hit new highs before gold makes a new high. Maybe not silver. Silver could take out the high, which was 54.40-ish, before gold. In fact, I think silver will make a new high before gold, but gold will make a new high probably before the end of the year. And what is going to be driving gold to record highs and silver to record highs and gold and silver stocks to new highs is going to be the Fed. Remember, we have one more FOMC meeting. I believe it's scheduled for December 10th. And that is actually the day that I'm going to be flying back to the U.S. from Amsterdam. I will be speaking at a gold conference there. If I have any Dutch fans who are going to be in Amsterdam, they could come see me. I am going to Amsterdam directly from Dubai, where I'm going to be having that debate conversation with CZ on tokenized gold versus Bitcoin. So I'm going to be in flight when that FOMC decision comes out. I mean, I'll try, I forget if I'm going to have any live television, on the plane. But I'll be able to talk about it probably the following day, but I'm not going to really be seeing it live. But that's the date. I think it is the 10th. And I know that because I got an email from Fox Business, Liz Clayman, who always likes to invite me on when we have the FOMC meetings. I got the invite, but had to turn it down because of, my travel plans. But I believe the Fed is going to cut rates again. And if you recall, the last FOMC meeting, that's when Powell threw a monkey wrench into the whole, rate cut, narrative by kind of saying he didn't really know what he was going to do, that it was kind of like a coin toss, that, they could cut rates, they could leave them the same. They really didn't know. It kind of depended on the data. And that really pulled the rug out from under these expectations. And the markets went down. They were nervous about it. And if you recall what I said on my podcast, I said I didn't believe the Fed. I didn't believe that they weren't intending to cut rates. I think they absolutely knew that they were going to cut rates again. They just didn't want to come out and admit that. They wanted to pretend to the markets that it's not a sure thing, that it's not a lock, and that, they're weighing the evidence, knowing that it really didn't matter because the economy is much weaker than they are letting on. And of course, there's a lot of behind the scenes pressure from the Trump administration. So they're getting a cut. But what helped revive the markets over the last couple of days was FOMC members coming out, including again today, and expressing that they want to cut rates, that the Fed is now, or they are more worried about the labor market and softening in the labor market than inflation. In fact, the party line that they're all towing at the Fed seems to be that inflation is behaving, that inflation is coming down. And so what the Fed is really concerned about is potential weakness in the labor markets. And that's, of course, exactly what the stock market and other markets want to hear. And I think that is what is driving the rally. And I do expect now, I think the odds of a December rate cut, which had fallen back down from like 90% to like 50%, are now back up above 80%. So that's what's going on with the markets. And I think that is also why you're going to see this surge in gold. And I think the dollar is now just rolling over. I talked also on my last podcast, or I don't know if I was on this podcast or the Schiff Gold Market Wrap, about what was going on in Japan. And that was also hurting our markets until the Fed came in with a rescue. And, these statements may very well have been damage control, as FOMC members were worried about the markets and they thought they needed to, throw it a lifeline. But I mentioned yields in Japan had moved above 1.8 on the 10-year. They backed down. Now we're back above 1.8. 1.81 is what I'm looking at now. This is a new 20-year or so high as we continue to march towards, and then I believe through, 2% yields. Now, 2% yield on a 10-year may not sound like a lot, but in the land of the rising sun, it is when you're used to, or they were used to, yields of 25 to 50 basis points. So this is a huge move, and it's not going to stop at a round number. But I think that round number is going to be a significant event, because the cost in Japan to the government of financing this massive debt is going to be significant. And I mentioned, yes, it was on the Schiff Gold Market Wrap, that what I think may happen in Japan is that to finance the massive stimulus plan that was just announced, that they will sell treasuries to pay for it rather than increasing the issuance of JGBs, because the Bank of Japan, or the government, indicated that there would be no increase in the issuance despite this huge stimulus package that needs to be paid for. If they're smart, or I know they're smart, but if they do the right thing, they will sell U.S. treasuries, which is going to be very problematic. But of course, that's another reason why the Fed is going to have to go back to quantitative easing and easy policy to try to offset the torpedo that the Japanese will be launching our way should they decide to start selling U.S. treasuries, because they're now the number one holder. They're more than Japan. China rather. China was, I think, number one, but they've stopped buying. And so we rely a lot on Japan, but that could change. So the markets are reacting to the economic data. The consumer sentiment numbers came out today. We're getting more economic data, and it sank to a 7-month low. In fact, in October, the reading was 94.6, and the reading collapsed in November all the way down to 88.7. So that's a big monthly drop in consumer sentiment. And I think a lot of this is being driven by inflation. Despite the fact that the president seems to believe that inflation is under control or non-existent, everybody is talking about the affordability crisis, whether it's housing, whether it's healthcare. It's all about things are not affordable anymore. People have a hard time making ends meet. And of course they have a hard time making ends meet because of all the inflation that the government has created. I think it's very rich that both the Democrats and the Republicans agree that we have this affordability crisis. In fact, it was that issue that propelled Mandami into the mayor's office in New York City, because he was playing into the fact that everything was too expensive and that the government was going to help lower the cost of living. But of course, it's the government that raised the cost of living in the first place. And it's both Republicans and the Democrats that are directly responsible for the affordability crisis. Because the reason that things are so expensive is because both political parties have decided to fund government spending through inflation. There is no appetite at all for reducing government spending and balancing the budget. Both parties want to continue to spend money that the government does not collect in taxes. So where does that money come from, right? It has to come from somewhere. And it's coming from the Fed, right? It's new creation, it's money creation, it's inflation. So instead of raising our taxes, in fact, they talk about cutting our taxes, but instead of raising taxes to pay for all this government, they rely on deficit spending and the Fed. And as a direct consequence of that, prices go up. That is how Americans are paying for government. They're paying for government by paying higher prices as opposed to higher taxes. So the increase in the cost of living is the direct consequence of the expansion of government. We don't get all this government for free. We're paying for it. We're just paying for it when we go to the supermarket, right? When you go to any store and all the goods are more expensive or all the services are more expensive, that is why. You know, I was looking at just this article today that was up on Zero Hedge about $4 French fries, and it was going over how much food prices had gone up at McDonald's just in the last 4 years. And it was practically double, you know, for hamburger, French fries, whatever was on the menu. But these are incredible price increases in just a short period of time. And it's not going to stop, right? The price increases are going to continue, and the government is allowed to somehow say there's this affordability crisis. I mean, the biggest irony is with Obamacare, you know, where they're saying, no, we have a healthcare affordability crisis, so we need to increase the subsidies for the Affordable Care Act. But the Affordable Care Act was supposed to make healthcare affordable. I mean, it was passed a long time ago. Yet healthcare is more expensive than ever, even though we have the Affordable Care Act. And it's not that healthcare is getting more expensive despite the Affordable Care Act. The Affordable Care Act is actually helping to make healthcare even more expensive than it would have been if we didn't have the Affordable Care Act. And now Donald Trump is now endorsing this 2-year extension. Hopefully there'll be a lot of Republican opposition to this. But Donald Trump is saying, okay, we can have a 2-year extension. The minute that happens, that's it. If the Republicans agree to a 2-year extension, it's permanent. If they can't take away the COVID era subsidy now, they'll never be able to take it away 2 years from now. Right? The longer a temporary program remains in effect, the harder it is to get rid of it. So the best chance we have of getting rid of the subsidy, forget about Obamacare itself, but this new subsidy is right now. And if the Democrats win, right, or if they get a 2-year extension, then it just makes the whole thing even more entrenched into the fabric of our healthcare system, and no one's going to take it away. And of course, the subsidies are going to fuel the affordability crisis. The more the government subsidizes something, the more expensive it gets. You know, I don't want to talk about this on the podcast because I spent 2 hours talking about it on Spaces on my X account earlier today. So go there. I spoke for 2 hours. I took questions about Fannie and Freddie and how Fannie and Freddie, with the government's help, have totally screwed up the housing market, how Fannie and Freddie are primarily responsible for the affordability crisis we have right now in housing. And so I don't want to just completely get into it because I spoke so much about it. And there's so much good stuff. You got to spend the 2 hours or at least listen to the first half. I mean, the second half is more Q&A, but I got a lot of good information because there's all this nonsense out there about trying to recapitalize the GSEs or uplist them or release them from conservatorship, all this, a bunch of nonsense. But I talk about all that. But one thing I didn't mention on that space is, because I didn't see the data until later in the day. But the houses that were delisted, right? Delistings where a home gets put up for sale and then it doesn't sell. And so the seller takes the listing down, right? So the house is available for sale, nobody buys it, and then the seller says, I'm taking it off the market. Those delistings have just hit like a record high, or 8-year high, not a record high, but it's the 8-year high. Now, why are houses not selling? Because they're too expensive, right? That's why they're not selling. People can't afford to buy them. Now, if the government sits back and does nothing, the housing affordability crisis is going to solve itself, because housing prices are going to collapse. They will collapse to the point where they're affordable. That's the solution, right? So you won't have to worry that mortgage rates are high, because you won't have to borrow that much money to buy the house, because the price is going to be a lot lower. But that is the one thing that the government is trying to prevent from happening, because the government artificially boosted home prices with cheap money. But now, if we lose the home equity and the collateral for all these mortgages, Fannie and Freddie are broke again. It's another housing crisis. So the government, they talk out of both sides of their mouth. They complain about the housing affordability problem, but everything they're doing is trying to keep housing prices from becoming affordable, because the last thing they want is the prices to come down. Anyway, stick around. We got a quick commercial break, and I'll be right back. I got a lot more to discuss on this Thanksgiving week. So be right back.
It can be hard to talk about not being able to get hard, but HIMS is here to make things much easier. Their all-online process connects you with a licensed healthcare provider who can recommend personalized ED treatments from the comfort of home. Get a boost in and out of the bedroom with access to personalized treatments, including daily options for more spontaneous sex. Through HIMS, you can access personalized prescription treatments for ED like hard mints and Sex RX Plus Climax Control. HIMS offers access to ED treatment options that cost 95% less than brand names. New Sex RX Plus testosterone support includes tadalafil for better bedroom performance and zinc for testosterone support. With hundreds of thousands of trusted subscribers, HIMS can help find the ED option that works for you if appropriate. Just fill out an intake form on their site and connect with a medical provider who can determine if treatment is right for you. The process is 100% online, which means no office visits and no pharmacy lines. No insurance is needed, and one low price covers everything from treatments to ongoing care. If prescribed, your medicine ships discreetly to your door for free. Start your free online visit today at hims.com/gold. Find ED treatment that's up to 95% less than brand names at hims.com/gold. hims.com/gold. Actual price will depend on product and subscription plans. Featured products include compounded drug products, which the FDA does not approve or verify for safety, efficacy, or quality. Prescription required. See website for details, restrictions, and important safety information.
So another reason that I think investors are buying gold again, and why they're going to be selling the dollar, is the odds shot up for Kevin Hassett to be the next Fed chair. And if you look at Polymarket, he's now in first place with a 55% chance of being Trump's pick to replace Too-Late Powell. 55%. The number two guy is at 21%, Christopher Waller, and then Kevin Walsh is down at 14%. So it's really narrowed down to those three guys, and Kevin Hassett is now the odds-on favorite to be the next Fed chairman. And of all of the candidates that Trump was considering for the job, Hassett is the most dovish. But not only is he likely the most dovish, but he's also likely to do what the president wants. He's probably the most loyal Trump supporter, being, his chief economic advisor. But I think that if Trump wants to put a puppet as Fed chairman so he can pull the strings, Kevin Hassett is the puppet that he's going to pick. So this, I think, is very negative for the dollar. It means a weaker dollar. It means higher inflation, and it means, higher gold and silver prices. I mean, that's why the rally continues. Gold's now up $17, up another $6 from when I mentioned it before the commercial break. So we're now at 41.47, and silver is now above 51.50. It was actually just below when I mentioned it. So it's up 11 cents. So the markets are very strong, and that is one of the reasons for this. So we've got the December rate cut back on track. We've got a super dove teed up to be the next Fed chairman, and the economy is weakening, right? They are, trying to figure out what to do. Trump is starting to roll back tariffs left and right, recognizing that they're not doing what he had hoped, but the economy is in trouble. He's trying to find ways to lower prices because affordability is the big problem, and he worsened that problem with his tariffs. And so now he's trying to reduce prices by removing tariffs without admitting that the tariffs are causing prices to be higher, which is obvious because if removing tariffs lowers prices, then imposing them has to raise prices. It's impossible for that not to be the case. But also, the other thing that I think is going to help the gold market is the air coming out of the Bitcoin bubble and the crypto bubble. And, no better example of what's going on there is in the stocks, these companies. And MicroStrategy, a warning, because I think it was Morgan Stanley that came out and said, there's a good chance that the indexes, the global stock market indexes, like the world MRCI index, that they're going to kick MicroStrategy stock out of the index. And that means that companies that are tied to those indexes that now own MicroStrategy or Strategy. I keep using the old name. I joked they should have changed the name to Micro because that's where the stock is going as opposed to Strategy. I saw some joke online where they named the company Tragedy instead of Strategy. Tragedy is probably another good name for the company. But anyway, it's Strategy. But if Strategy is kicked out of these indexes, that means a lot of index funds that bought it are going to sell it. Now, I 100% agree that Strategy never should have been added to those index funds in the first place because it's not a viable business. I mean, there is some kind of software business buried beneath that Bitcoin balance sheet, but it is so small, it is inconsequential to the stock. All MicroStrategy is a levered Bitcoin ETF. And why should an ETF be in an index of stocks, right? It shouldn't be. And if you are trying to buy stocks, which are operating businesses, right, that are expected to make profits by producing goods or performing services, you shouldn't be forced to buy MicroStrategy just because it's been added to an index that it never should have been a part of. And so I think it's a smart move to get rid of it. But, that will also help undercut its prestige and whatever demand there was for its shares. But, I have challenged Michael Saylor. He won't accept the challenge to debate the very premise of his business. I think the whole business model is a fraud. I think it's a sham of a company, and it eventually has to implode. Now, it may already be doing that if you look at the stock price. And you look at the stock price of all the copycat companies, the other Bitcoin treasury companies that have gone down even more than the 70% that Strategy has gone down. But Strategy is not even close to finishing this bear market. But I think as the air comes out of the Bitcoin bubble, where are disgruntled Bitcoiners going to go? Well, obviously, I mean, some of them, may try to gamble, with other, tech companies or who knows. Right? There's some part of the Bitcoin trade that isn't really looking for an alternative to the dollar or looking to gold. But there certainly is a percentage of people in Bitcoin that were under the delusion that they were buying some kind of supercharged version of gold, that it was digital gold. And so they bought it. But now that its performance is so bad, and the performance of actual gold is so good in comparison, I think a lot of that money is going to start moving into gold. And I think a lot of the money that maybe was on the sidelines, that wasn't buying gold or Bitcoin, but where Bitcoin was kind of killing the gold story, I think now that, the Bitcoin, fever has broke, and now the gold story, looks a lot better to a lot of fund managers who now are not going to say, well, gold, what about Bitcoin? People might buy Bitcoin instead of gold. It's going to be pretty obvious that that's not the case. The central banks want no part of Bitcoin. They're buying gold. And so investors are going to be discovering gold. I think we've already seen the lows for this pullback. We've seen the lows in silver. We've seen the lows in gold. We've seen the lows in this pullback in the mining stocks. And we are all pumped and ready to go, hitting new highs, probably even before the December FOMC meeting. Anyway, so Thursday is Thanksgiving. And Friday is Black Friday. Although Black Friday now, I don't know. It stretches for weeks at this point, and then you got Cyber Monday and all these holidays that come around. And, the problem with all these holidays, they are basically glorifying spending and consumption, acting like these are these important days because that's when Americans run to the mall and shop. And the problem is that a lot of the Americans who are going to the malls are broke, and they're shopping anyway. And they're buying stuff that they can't afford, and they're paying for it with credit. Now, none of this should be, celebrated, right? People who are struggling should be encouraged not to go out shopping this Christmas. Put their credit cards away, right? You could celebrate Christmas without, a bunch of expensive store-bought gifts, right? You're not doing your family a favor by going deep into debt on a holiday, right? But this is what we encourage. And of course, all this stuff, right? All the Christmas presents that Americans are going to stuff into stockings or slip beneath trees, all that stuff is imported, right? Donald Trump is upset that we have these massive trade deficits. Well, Christmas is part of the reason, because all of the Christmas presents, Santa's workshop, right? It's not in the North Pole, right? It's in China somewhere, right? That's where it is. In fact, when kids write letters to Santa Claus, that's where they ought to send them. Send them out to China, right? Because they're making all of our toys. So, why are we even encouraging everybody to go out and shop? It's just going to run up the trade deficit. And now, of course, a lot of these Christmas presents are going to be tariffed. So they're going to be even more expensive. So now the Americans are going to have to borrow even more money to buy these presents. But, the real economic growth doesn't occur where the goods are consumed. The real economic growth is where they're being produced, right? And anybody can go and buy stuff, but not anybody can make stuff, because making stuff requires capital, right? It requires infrastructure, investment, supply chains, workers. Just taking a stimulus check to the mall doesn't require anything. So we're celebrating all of the wrong things when we turn this into a big shopping holiday. If people really understood the meaning of Thanksgiving, and I've talked about this in prior podcasts, but a lot of people don't understand that what Americans were really thankful for, right? Back when we had the first Thanksgiving, we were thankful that we gave up on socialism and adopted capitalism, right? Because the early settlers in America, when they landed here and they came across on the Mayflower and they set up their colony, they originally organized a communion that was kind of a Marxist. Of course, there was no Karl Marx way back then, but it was the exact same principle on which, Karl Marx founded communism. It was from each according to his ability to each according to his needs, right? It wasn't, everybody owns some land and farms it. Everybody came, and it was like a communal effort that everybody would just work as hard as they could to grow food, and then everybody would contribute whatever they grew into a communal, whatever they had, and then everybody would eat what they needed. Right? It was a group effort, and they almost starved to death. I mean, literally. I mean, the whole country might have got off the ground. They basically, they did exactly what Mandami, right, thinks is such a great thing. Right? There was no individual profit incentive. There was no exploitation of the worker. There was no boss or business owner. There were no greedy capitalists, right? It was like, hey, we're all going to cooperate. We're all going to work for the benefit of everybody. Nobody is going to eat any more than anybody else. Everybody is going to benefit equally from the work that we all do. Well, the problem was nobody worked. People kept getting sick. They didn't feel like working, right? Why work? Why bother? If you're not going to eat any more food because you work hard, why work hard, right? If the next guy who slouches off, if he's got as much of a claim on the food that you produce as you do in your family, then why do anything? It creates this moral hazard. Under socialism, nobody wants to do anything, right? That's why this nonsense doesn't work. People talk about this idealistic society where everybody just does what they can, right? And everybody. Nobody's going to study. No one's going to. Why are you going to work hard to get a high mark when you're just going to get a C, right? No matter what, right? You're going to get the same grade whether you work hard or not. So, have fun, right? Because the guy that does have fun, he's going to get the same grade as you. And so that's how it worked in socialism. That's how it worked in America when everybody almost died. And it wasn't until they changed their economic model and said, okay, forget about this socialism. We're going to, carve up the land, and we're going to assign to each family their own land. And the people who own that land, you farm that land, and whatever you grow is yours, right? You get to keep it. Nobody else can claim it, right? It's every man for himself. You get to reap what you sow, right? Capitalism. And you know what happened? Thanksgiving. They had such a huge bounty of food. All of a sudden, when you eliminated this collectivist mentality and you had incentives where people could own their own little piece of land and reap the rewards of their own work. So if they didn't work, they didn't eat. But if they worked, they ate like kings. And so everybody worked and everybody benefited. And, that's the real story of Thanksgiving. They're celebrating capitalism because they didn't die. They almost got killed from socialism. But, they don't teach the real story of Thanksgiving in our schools because most of the teachers are themselves socialists. They don't understand how capitalism works. So they're obviously not going to try to explain that to their students. So if you have any young kids this Thanksgiving, you might want to tell them the story. And there's more details. I'm leaving some of them out. In fact, I know in other podcasts I've gotten into it more detail. There's some articles that really describe this online, so you could brush up on it. And you could talk to your kids. It's almost like, at a Passover Seder, you have the story of the Exodus and Moses, and you tell everybody, why we're celebrating Passover. This is what people should talk about on Thanksgiving, especially, it's an American holiday, but it's also about capitalism. And it's a lesson that people need to learn because now you got everybody that wants to give socialism a try. We don't have to give it a try. The Pilgrims tried it. We know it doesn't work because they almost all died. That's how bad it is, right? It destroys every community it infects. And even a little bit of socialism does a lot of harm. Look at all the problems that we have in our economy today. They are all the result of socialist policies and programs that got mixed into capitalism. And the worst part about mixing in a little bit of socialism with capitalism, other than all the harm that it does, is that capitalism always takes the blame, right? It's not socialism, right? No, it's, look at what capitalism did without any appreciation of the socialism that actually caused the problem. But the worst part about that is then the solution that is proposed is we need more government. See, look how bad capitalism is. It screwed up housing. It screwed up healthcare. We screwed up education. We have all these crises that now need to be fixed. And the solution is always more government. More government just makes the problems that government causes even worse. The solution is always less government, roll back government, get rid of government, and have more capitalism. Oh, I also wanted to mention, before I forget, about Thanksgiving. Normally in, the crypto land, Thanksgiving is supposed to be the holiday where everybody is out proselytizing and getting new converts, right? Because, last Thanksgiving, all the crypto guys are, coming home for Thanksgiving, talking to their parents or their siblings or other relatives who are gathered around. And they tell them about how much money they made in Bitcoin and try to get them to, buy. Because again, the Bitcoiners are the Hare Krishners of the investment world because it's a cult, but it needs to expand, right? The only way to keep this thing going is to bring in new suckers. You need new people to buy in so the people that already bought in can get out, right? That's the whole nature of the beast. That's the greater fool theory. So a lot of the greater fools were brought in around the holidays, right? Because the triumphant Bitcoiners would return home to brag about all the money they made during the year. And, since last Thanksgiving, hey, Uncle Joe, did you buy that Bitcoin like I told you? It's going to the moon, right? Look at it now, right? Oh, shoot, I didn't buy it. Oh, I'll buy some, right? Everybody wants to talk about it. Well, what are the Bitcoin conversations going to be like this Thanksgiving when Bitcoin is basically the worst performing asset on the year, right? I don't know, it's down 5 or 10% so far this year, but it could be down even more by Thanksgiving. We got a couple more days. We talk about Black Friday. It could be a black and blue Friday for crypto because the chart still looks really bad. I mean, Bitcoin is, 87,000 and change. It's way below 100,000. But just like I think gold and silver stocks are now leading gold higher, crypto stocks are leading Bitcoin lower. You're seeing the profound weakness in these companies. And of course, remember, these companies have been a source of demand. They've been buying up these Bitcoin treasury companies, right? Well, they're going to start selling. I mean, this whole thing is collapsing. So I think now, to the extent that people are going to be talking about Bitcoin around Thanksgiving dinner, it's going to be about how much they lost in Bitcoin, right? Because a lot of people might have bought some Bitcoin after last Thanksgiving in November when Bitcoin was above 100,000, right? It got, and now it's substantially below. In the meantime, they missed out on more than a 50% gain in gold and more than a double in gold mining stocks. Some of them tripled or quadrupled. So that's where the real money was made. People got destroyed, right? They lost way more money in crypto stocks than they lost in Bitcoin. But if you compare how much money you lost, somebody maybe put 10 grand into Bitcoin stocks, some kind of crypto stocks at the beginning of the year, and their 10 grand is worth 3 or 4,000. Whereas had they put it in gold stocks, it'd be worth 20 or 30,000, right? So it's a huge difference, like a tenfold difference between where they are now in crypto stocks and where they would have been in gold mining stocks. So it's not going to be a Merry Christmas, I think, for the crypto crowd. People online were expressing a lot of hate for me, like this past week as I was, posting about Bitcoin going down. And of course, I don't only post about Bitcoin when it's going down. I post about it when it's going up too. And I tell people to sell, right? And not, it's not like I'm buried when Bitcoin was making new highs. I was out there saying, this is ridiculous, right? This is a bubble, right? So it's not like I only post when Bitcoin is falling, but maybe some of the Bitcoiners, that's the only time they notice my posts is when Bitcoin is going down. But a lot of them are just calling me like I'm a nasty person, I'm a mean person, that I'm celebrating people losing money. No, I'm not. I'm not glad that people are losing money. Although, first of all, what's so ridiculous is these Bitcoiners, they come out and say they don't care about the price of Bitcoin because they measure their wealth in Bitcoin, right? Doesn't matter the exchange rate to the dollar. If you own one Bitcoin, you own one Bitcoin, right? And all they care about is increasing their stack. Well, if that's the case, then no Bitcoiner has lost anything. Who cares what the price is? In fact, now you can buy more for less. So, basically this is great news. If you're a true Bitcoiner, the lower the price, the better, because you can get more Bitcoin. If that's all you care about is having more Bitcoin, well, the lower the price goes, the more Bitcoin you could afford, right? So obviously, they should be happy about this. So, I'm not, rubbing salt in the wound. This is good, right? This is good news, and if Bitcoin keeps falling, 50,000, even better. 20,000, great. 10,000, ecstatic, right? The more for you, right? Keep falling, and you can buy more Bitcoin. But yes, there are a lot of people that are not happy who bought Bitcoin, who wanted it to go up because they want to sell it and make some money. And I'm not glad that people are losing money. In fact, I did everything I can to prevent people from buying Bitcoin in the first place. Now, clearly, obviously, yeah, people who ignored me 10 years ago and bought Bitcoin anyway, yeah, they made a lot of money, assuming they're smart enough to get out. A lot of them won't be, and they'll end up losing whatever they thought they made. But clearly, the people who bought Bitcoin in recent years are worse off. Not only because Bitcoin is down, but because the other things they could have bought, like gold or mining stocks, have gone way up, and they didn't buy those things. But I am not happy that people are losing money. Now, I will be happy if the Bitcoin bubble collapses, not because the people that own Bitcoin lose money. I already know they're going to lose money. It's because new people didn't get suckered in. See, I'm happy about the losses that won't take place. See, the higher Bitcoin goes, the more people are going to be suckered in to buying it. And so the more people who are going to ultimately lose money. So if Bitcoin really falls and that causes people not to want to buy it anymore, that's great, because now people who might have lost money buying Bitcoin aren't going to lose their money because they're not going to buy Bitcoin. Now, is that bad for the people who already own Bitcoin and want to sell it? Sure, right? But that's their own fault. I have to do whatever I can to get people, out of this thing before the music stops. But it's not just, the loss of money from individual investors. I've said that I believe that Bitcoin is extremely damaging to the U.S. economy because resources and capital, including human capital, labor, are being misdirected into this industry that would otherwise have been used more productively. So I don't like the fact that our resources are being squandered, that so much of our capital and some of the smartest, young people around are wasting their talents on crypto when they could be doing something that would be far more productive and beneficial for the rest of us. And so the sooner the air comes out of this bubble, the better. The less damage that the bubble will do to the economy. And the damage is done while the bubble is inflating. That's always the case, whether it's housing, student loans, wherever capital is misdirected by government. The mistakes are made when the capital is misallocated and the malinvestments are funded, right? Except when we're making the mistakes, and that may be overinvesting in AI data centers, right? But when the mistakes are being made, it feels good because everybody's happy and, markets are going up and it looks like there's this real boom. But that's where you're having the overinvestment or the misallocation or the malinvestment. It's when the bubble pops that the mistakes are revealed, right? That's not what causes the problem. That's basically what exposes it. And that's the beginning of the cure, right? That's what corrects the imbalances. That's what sets the stage for healthy economic growth, right? And that's what's coming. So the sooner the air comes out of that Bitcoin bubble, the sooner we expose all of the problems that we created during the bubble, and now we can start repairing the damage and reallocating resources. Like I mentioned on the my spaces today, the first rule of holes is when you're in one, you stop digging. And we are in a huge hole thanks to crypto. And the longer this goes on, the bigger the economic hole we dig for ourselves. So the sooner we stop digging the hole, well, then it's easier to climb out of a hole that's not as big. And so, yes, I am happy about those things happening, but don't confuse that with saying, yeah, I'm happy that people are going to find out that they've lost a lot of money. I'm not happy about anybody losing money. But, the one consolation, I think, is that a lot of the people in crypto are young. And that's the best time to lose money, right? When you're young, right? Because A, you have a lot of time to earn it back, and you have a lot of time to learn a lesson, right? Losing some money in Bitcoin could end up being a valuable lesson that prevents you from losing a lot more money in something else in the future. So the young people, they'll get a nice lesson in life. They'll learn it the hard way, but maybe they'll learn it the good way. I feel bad for the older people my age, who might have put their retirement money into this Ponzi and who will lose money that they never have a chance to earn back. And they don't have enough years left to learn anything valuable from the lesson, right? It's too late to learn the lesson if now you're too old to earn any more money and benefit from it. So that is a problem. And I hope that I've done something. People think, hey, don't I feel guilty about all the people who didn't buy Bitcoin because of me? No, I don't feel guilty. But I do think that I'm going to save a lot of people who might otherwise have gotten wiped out in Bitcoin. And by the way, a lot of people who bought Bitcoin early, who bought it 10 or 15 years ago, bought it because of me, right? Not because I encouraged them to buy it, but because I educated them about economics, about sound money, fiat money, the Fed. And as a result of that, right, I put them on this road. And ultimately that road led them to Bitcoin, right? They took a tangent somewhere, right? Made a wrong turn on that road, right? And they ended up at Bitcoin. But if it wasn't for me, they never would have gotten on that road in the first place. And because they got on that road, they ended up at Bitcoin, and they thank me for it. They credit me for it, and they say, you're the reason I made all this money in Bitcoin. So, some people made money in Bitcoin because of me too. But the bad part about it is the reason these early adopters who may have bought Bitcoin because of me, the reason they made money is because somebody else is going to lose it. That is the sad part, that all of the profits that the early adopters, the early buyers realized on their Bitcoin will come at the expense of a far greater number of people who realize significant losses. Because there is no wealth that was created here by this Bitcoin mania, right? Money was transferred from the people who sold Bitcoin to the people who bought it. So the people who sold it cashed out with the money that the later people put in. But those people will never get anything out because there won't be another group of fools to pay a higher price. They end up as the bag holder, and then everything collapses, and the Bitcoin they own is worthless. But the people who they bought it from, right, they got cash and they did something with it. They bought real assets, they bought real estate, they bought stocks, they bought gold, or they just spent it, right? They bought cars, they took vacations, they enjoyed themselves. But all of that was paid for by the final round of fools who is stuck holding the bag. Anyway, on that note, everybody have a wonderful Thanksgiving. Most likely, I won't do a Schiff Gold Friday market wrap unless something really extraordinary happens. For me, I know I have some plans, but it's possible if something really crazy happens in the market and I feel like I just got to say something about it, then check the Schiff Gold's YouTube channel just in case. But in the meantime, as I said again on the episode last on Friday, I again encouraged everybody to go out and buy Bitcoin over the weekend. I mean, not Bitcoin, to go out and buy gold and silver over the weekend, because I thought we would have a big move up on Monday. And sure enough, we had a huge move up on Monday. And so if I don't do another one, just keep on buying. Buy over the Thanksgiving holiday. Buy over the weekend. You want to get more long into these new highs. Look at the gold fund, the Euro Pacific Gold Fund, EPGIX. We still have a ways to go now, at least a 10% rally to make a new high. And I think we're going to do that before the end of the year. So you still have a Christmas gift opportunity coming up to buy these stocks on that ridiculous pullback. So do that. Go to Europac.com and get information on the site on the mutual funds. You can talk to the advisors. And also, if you haven't already subscribed to our newsletter at Schiff Sovereign, again, some excellent content that we're putting out over at Schiff Sovereign. So if you're not getting these newsletters in your inbox, just make sure you go to the website, schiffsovereign.com, and sign up. And also, you can try our paid letters. Our newest one is Strategic Assets, where we provide a lot of independent investment research, and we try to uncover some hidden values in some of the smaller companies that are beneath pretty much everybody's radar, but ours. And we're trying to put them on yours. And it's a good letter, and it's a great value. Probably makes a good Christmas gift as well. Anyway, have a great weekend, everybody. And I will be back with more podcasts next week. Bye for now.